I want to welcome you to the fifth of 7 sessions about business planning for agritourism enterprises. Today, we are focusing on everyone's favorite topic, financials. My name is Lisa Chase, and I'm with University of Vermont Extension and the Vermont Tourism Research Center. Thanks to the Global Agritourism Network and the National Extension Tourism Network Agritourism Working Group for jointly hosting this webinar. And I especially want to thank the Northeast Extension Risk Management Education Center for providing funding through a grant for this workshop, this series, as well as one-on-one technical support that follows this series that we'll be talking about more, not next week, but the following Tuesday, the last Tuesday of this series. Today, as I mentioned, we're focused on financials, and we are very fortunate to have Curtis Munkin from the Center for Farm Financial Management and also Zach Smith from University of Vermont Extension. We're going to dive into the heart of the topic very soon, but first, those of you who've been with us before will know that we want to take a minute to get to know who's here in the room with us. So if you wouldn't mind, open up the chat, make sure it's on everyone, and introduce yourself. Take a moment to let people know who you are, where you're from, and I'm gonna launch a couple of polls to ask you a little bit more about how familiar you are with financial statements. So you should see a poll on your screen that asks if you're familiar with the 3 main financial statements: balance sheets, income statements, and cash flow statements. I can see the votes coming in, so we'll give people a little bit more time. I'm ending the poll and sharing the results. And you can see that about half, over half, are familiar with the 3 main financial statements. About a quarter, kind of, and we've got a little less than a quarter are not familiar. So that makes the job especially interesting for Curtis and Zach, as they're talking to people with a lot of different levels and familiarity with financial statements. So here's another question. Have you developed financial statements for an operation? Could be your own or could be somebody else's operation. And have you developed these financial statements either on your own or with another person? I'm going to end the poll and we'll share the results. And very divided audience here. So 48% said yes, they have experience developing financial statements for an operation, and about 40% said no. Very helpful information to understand as we move forward with the topic today. And now I'm going to turn it over to Curtis first to talk about the financial section in AgPlan and financials in general for agritourism enterprises.
Good morning. I'm lucky to be back with you again. I was with you a few weeks ago, kind of introducing AgPlan. I'm with the Center for Farm Financial Management. I'm Curtis Monken, and I've been doing financial work in some capacity for the entirety of my career, which is approaching the 18 years or something like that. So I can't remember, maybe 20 years. But I used to work directly with producers when I was working at the University of Kentucky, and then I have been here at the University of Minnesota for about 15 years doing kind of more of the educational arm as opposed to the direct producer work. So I have had a long history of working with producers, both big and small, on their financials and what is going into that. And when it comes to the financial section and the financial part of a business plan, oftentimes this is the most important part of the business plan. All of the things that you have written up to this point is now going to kind of boil down to numbers. And if you are going, if you're proposing new changes, if you're requesting loans, those types, or partners, grants, those types of things, This section can be the most important part of that business plan as we go through. So as we look at AgPlan, hopefully you've already seen these and hopefully you're not too worried about them. But these are the sections that we have in AgPlan. We start off with a financial position. I'll go into more depth on these as we go through here today, but then we'll talk about historical performance. We'll talk about projecting your finances. We'll talk about asset management. I'll briefly mention benchmarks, and then we'll get into the capital request. And as you can kind of see, we're stepping into different levels of the financial areas here. And ultimately, for a business plan, if there is a capital request, we want to get to that point where we are, where we've written that. So, as I said, I'm with the Center for Farm Financial Management, and as we look at financial viability, as we look at financial sustainability, it's generally evaluated from three perspectives. And you've probably heard someone at some point talk about this, where we're looking at solvency, we're looking at profitability, and we're looking at liquidity. Solvency, for those of you who maybe don't have a lot of experience with the financial statements, it's how much you are going to own if all of your debts are paid. So basically, if you had to liquidate the business, how would you come out? So if you have money left over, you're solvent. Profitability, we're looking at earnings and how much are you earning over a time period. And then liquidity, we're looking at cash flow. And then the debt repayment ability. And if you're a lender in particular, the debt repayment ability is the one that they're really going to be honing in on. And that's the ability to pay when things are due. So those three legs of the stool, I like to say, if you have two of them, but you don't have the other one, the stool is going to be a little wobbly, maybe a lot wobbly. But if you have the three and you're working on all three and we're evaluating that, then you will have a stronger financial picture. So the financial position, this is the first section as we go into the AgPlan financial section. And really we're looking at a balance sheet, and that's the starting point, because a balance sheet is really measuring solvency. It's measuring what you have in assets or things that you own compared to who you owe money to, liabilities. And then the difference then is then the net worth, and the financial position. The balance sheet is documenting that net worth section. So we start from here, from everything. From a lender standpoint, they're going to look at this and want to know what they have to work with, basically. What liquidity do you have on the balance sheet? What things do you own? If you don't own something, then how are we going to get to that point? A lot of times they're looking at collateral as we get into that, but that's what we start with the financial position. As I mentioned, we measure this with a balance sheet. And if you've never seen this before, quite a few of you have probably had to do one of these at some point. But the way that we outline a balance sheet in agriculture, from how we see it, is that we have assets on the left, liabilities on the right. And then under each of those, we then break them up into current, intermediate, and long-term categories for both of them. Current, from an asset side, that's anything that you own that has a useful life, if I pull out the economist terms, of less than 1 year. But think of this as like cash, or if you have inventory, something that is going to be used up within that time period, within that year. On the intermediate side, this is something that has a useful life of 1 to 10 years. Generally, equipment, tractors, bagging equipment. Think of the things that you're going to use, and you pretty much have an idea of what those things are that are going to go into each of those sections. And then from a long term, these are buildings. These are things that you're not going to replace quickly. A lot of times they're going to be a lot more expensive as we go through it. But those are what the three categories. Then on the liability side, current, those are things that you're going to have to pay back within the next year. Then intermediate, those again, those are your term loans where maybe it's a 5-year term loan that you have. Think of tractor loans, vehicle loans, those would go in those categories. And then long term, those are going to be anything that has an initial repayment term of more than 10 years. You'll also notice as we look at this and how it's structured, when we have the current on the same line, it makes it really easy for us to just really quickly look and see, okay, how are we structured? Do we have too much current debt compared to intermediate and long term? And then because a lot of times with agricultural businesses, it's harder to separate out the personal liabilities and the personal assets. So we do list them here together. When we get into the balance sheet and the importance of it, I mean, as I mentioned already, this is where the lender is going to start. This is where they're looking to see all of the things that you own compared to what you owe to somebody else. It's their first chance to evaluate your financial strengths and weaknesses, and it helps them evaluate credit risk. Part of what we do at the Center for Farm Financial Management, we have a credit analysis tool that's used by many banks around the country where they're evaluating credit risk. They use that to put together things. And as we are working together, they're looking at balance sheets. They're looking and they're using our tools to help evaluate that credit risk. Now that's a separate tool compared to AgPlan, but that's kind of how all of these things go together. And it really is that starting point for the financial plan. So first thing, just really quickly, I'll give you maybe a minute or so to do this, just on a piece of paper, on not here in the chat or anything. Maybe just write down some of the things that you own, some of your assets. You don't have to worry about the liability side right now, but just really quickly in the next minute or so, write down what you own. All right. So hopefully that was a useful enterprise to go through and write down some of the things that you own. I mean, by doing that, congratulations, you've started on your balance sheet. So that's just one thing. And to kind of continue down that road in the future, just write down everything that you own on the left, write down everything that you owe to someone else on the right, and you have a pretty good start on your balance sheet. So I really like to focus a lot more on the financial position, just because that is the starting point for everything that you're going to do with the financial plan. Moving into the historical performance, which is the next section of AgPlan, this is where we're looking at what you've done, how you've performed financially over the last several years. And usually we are using income statements to evaluate and measure profitability. But if you haven't had to create an income statement before, and this is something that maybe worries you a little bit, have you had to fill out either a Schedule F or a Schedule C for your business in the past? Or, if you haven't had to do this, that's okay. That's something we're going to work on as we continue moving on. But really what we're measuring here is how much income the business is making in relation to the resources or money that has been used to produce that income. So as we start looking at ratios, that's a lot of the things that we do here. We're looking at what percentage of the expenses or what percentage of your gross revenue was paid out to operating expenses, for example. All right, so just really briefly looking at kind of the structure of the income statement, I want you to ignore the right-hand side of this for right now and just look at the left. This is what we call the cash side, and that's the easiest thing to kind of work through. On the income side, you're looking at how much livestock are you selling, maybe livestock products, cheese, milk, those types of things, any government payments or crop insurance. That's your cash income side. If we move down that list, then we have the expenses. Again, these are going to be things that you likely have a pretty good idea on all of these things as it is. Fertilizer, fuel. We're doing a lot of work with diversified markets farmers who are diversified in their marketing procedures, where they're looking at okay, what crates am I getting to put my strawberries in? The plastic clamshells and all of those things. Those are your total cash expenses. So then the difference in between that is your net cash farm income. Now, on the right-hand side, that's where we get into an accrual income statement. So a cash income statement is just looking at when things happen, when cash comes in, when we're paying out those expenses. But then to get to an accrual income statement, and that's where we end up wanting you to get to, is we're starting to make inventory adjustments. We're making adjustments for things that maybe you prepaid some expenses in previous years. So we're looking at what is actually happening on the farm in that year. When we look at individual cash years, they can fluctuate all over the place. But once we get into those accrual adjustments, that helps level it out. We can see, okay, what was used on the farm in that year. I'm not going to spend a lot of time on talking about the accrual adjustments, because I could just completely overwhelm you on that one. I would just recommend, if you're curious about that, I can put a resource in the chat later on. That would be a great place for you to kind of go, and if you're curious about that, to get more information. All right. Then we move into the financial projections. And as we start with the financial position, then the historical performance, that's really helping us lead into the financial projections. So if you've had that history, that will help inform you as you get to the financial projections, because using your own information is a lot more useful than trying to pull things out of thin air and not knowing if that's how you would make that decision, things like that. All right, so we're evaluating liquidity with the financial projections, and really we're using a cash flow statement. We're wanting to know cash in versus cash out. Projection is going to give us all the sources, all the uses of cash during that planning period, and we're really evaluating whether or not the business can meet the loan obligations and other financial obligations at that time. So to really put together a cash flow projection, again, I could go into a lot more depth on this, but just know there's six broad categories that you would want to look at for your cash flows. How much cash you're bringing in sales, things like that. Then we're looking at capital sales, so selling equipment, those types of things. Then we're looking at the cash operating outflow, so the cash expenses. And then if you're having to buy any equipment or livestock, things like that. And then we're getting into taking off any loan payments that you're having. And then the final category is then adding in any new borrowing. So if you have to take a new loan out, adding that in. So that gets us to our net cash flow. Those are the broad categories. Again, there's a lot more detail that goes in behind here, but if you can just on your own, just think through, okay, what money do I have coming in versus what do I have going out? That will help you. And then you can just use this outline to kind of help place things where they should go. Then we get into the asset management part. And this is really where, with the previous section with the cash flow projection and then getting into asset management, we're really kind of putting the financial, all the numbers, we're putting narratives around it. In the asset management section, this is where you're going to describe what equipment that you have, what do you need. For the equipment that you have, you might talk about how old it is, how efficient it is, or if you have buildings. Again, growing up on a dairy farm, how many cows do we have in our building? Can we add more, or do we need to build a new building? And if we do need to build a new building, then how do we approach it? How are we going to bring it in? Are we needing to lease equipment versus or buying? Those are all of the types of questions that we're really getting into there. And if you don't have the land part of it, what is your path to that land access? How are you going to acquire that, either renting or purchasing, to bring into your fold? And then, like I said, how efficiently are assets being used? So again, this is where we're really starting to put some of the narrative around what the numbers are really telling us. I'm not going to spend a whole lot of time talking about benchmarks because this is only specific to the commodity ag template in AgPlan. But if you're curious about benchmarking and comparing yourself to other farms that are doing similar things, you can go to finbin.umn.edu. We work with, I think there's 12 states that are collecting this information. In fact, the Minnesota educators who collect this information are in our offices today and tomorrow, aggregating all of that data so that we can share that with the rest of the country. But again, you can go to finbin.umn.edu. All right. So then the capital request section, this is where, again, all of the things kind of come to that part. So if you are needing to make a loan request, this is where you're going to describe how much money you need and how you're going to utilize it. And you're going to kind of boil all your financials down into, this is what I need. This is why I think it's justifiable. So you can talk about where you would propose to get funding from. I mean, if you're going to Farm Credit or someone like that, I mean, you can talk about that here. My brother, I'll use him. He's putting in. He's having a hard time finding labor, which I'm sure you've talked about in a previous webinar. But so he's looking at putting in robotic milkers and to try to give himself some help there. So he's having to find lots of different sources to find capital. And as we've been writing this section is where we've talked about, okay, we're needing to lease this equipment. We've talked about that in the asset management, but now we're talking about that here. We're talking about how much we want to put down. We're talking about we're going to go for this type of loan from FSA, guaranteed loans. We're talking about all of those things. This is where you get to present that financing request if you have one. And then if you do use this section, you can always go back to, I would just copy and paste this right back into that general summary area of your business plan. Again, I don't really want all of this to be, I don't want it to be scary. I know financial statements a lot of times are scary. I'll be perfectly honest. Why I am in this industry is because growing up on the farm, my dad didn't like doing all the finances. And because I'm the oldest, it kind of fell to me to do a lot of that. And so as I was working with people, with our person that we had, it became interesting to me, and I could really help some people in figuring out how to navigate financial statements. So it doesn't have to be scary. I mean, ultimately, it's your data, and you're trying to help someone else understand what's going on. All right, so we're kind of getting to the point, the end of my part before I hand it off to Zach. But financial statements, we don't want you to just do this alone. There are lots of tools that are available for financial planning that are out there. And oftentimes it's a lot easier to do this using a software program. Right now, if you haven't done your taxes yet, you've probably used TurboTax, H&R Block, something like that. It's the same thing where you have those tools that are helping you figure out what needs to go in all of these sections. And this is really what a lot of these tools are here as well. I mentioned FinPack, which is a CFFM product here. It's used by thousands of people around the country. It's an ag financial planning software. Within AgPlan, we also have some templates, some spreadsheets that are there, ranging from easy to use to a little bit more complicated. And then we're constantly trying to figure out our tools here at CFFM to figure out how beginning farmers, people who don't have an economics degree or a business degree be able to put all of this stuff together. All right. So the question that I have for you now, then, as we think about transition, what is something that might still hold you back from developing your financial section of your business plan?
So what I'm going to talk about is just iterate on some points that we've already discussed, and move forward with talking about how to put all of this information together. And of course, everything is here in AgPlan. So I encourage everybody to go to AgPlan when if you haven't already enrolled in AgPlan, you can find previous links that are available to get yourself started in this. But all of the sections that Curtis talked about are there within the financial section of AgPlan, of the agritourism component of AgPlan. So you can find everything within there. But what I want to do is talk over a few points. Basically, a little bit about my background is if you've listened to a few of these presentations, I work in agriculture and consulting agricultural businesses. Started as a Peace Corps volunteer in Ecuador, and my first charge was to start up or work with around 20 different community banks, which were groups of farmers that had gathered on their own and wanted to start up basically their own savings and credit unions. And what I found out is over the time that I would set up the credit unions and they would start loaning out money amongst their members, I would go there and I would ask, what are you guys up to? How did this go? How did the first loan go? What did you do with your first loan? And they were like, well, Zach, it was amazing. I went out and I bought a blender. And I was like, oh, well, that's kind of not what we're talking about here. We want to make this money work for us. And so, so I started basically doing business education, and a lot of the business education involved with taking on a loan is financial management, doing projections on new businesses. A lot of what I'm really passionate about and love doing is the financial planning around something that a farm wants to get into, like for diversifying revenue streams. And so when you're getting into doing all of that, when you're getting into your projections, which I'll talk a little bit about, you got to start with your historicals. You got to start with where you've been, and at the very least where you are right now. So a balance sheet, is just a way of considering, it's a snapshot of your farm worth at a single point in time. As about half of you have developed financial statements. A lot of that if you work with someone like myself, it's usually December 31st is when we look at and that's basically because everybody files their taxes on a calendar basis mostly. But yeah, it's just looking at the farm worth at a single point in time. It really just gives a good overall look at how the business looks in regards to primarily in regards to the solvency that Curtis talked about. But when you're getting in there and when you're putting together these balance sheets, I highly recommend utilizing the financial guidelines for agriculture. And there's a picture of it there. I can follow up with some other resources. I'll send some links out to other resources that I'm going to talk about. But they have asset valuation guidelines. And that just basically encourages you to be very rational with what you're putting together. There are a variety of ways to create valuations for your assets. A lot of it can be on a market base. A lot of it can be on a cost base, what it costs you to acquire that asset. But make sure that you're clarifying, so when you're putting that together, I say include footnotes. Make sure that you're clarifying how you came up with those numbers. Was it a cost base? Was it a market based valuation? Is very, very important, not only for third parties looking at your sheets, but also for people that when you're going back and looking at and doing evaluations of your businesses. And always be consistent and conservative with those numbers. On income statements, as we mentioned, it measures the profitability of the business. But a lot of the time, what we've talked about right now is a lot of like financial accounting, but also that you have to consider managerial accounting. Like, what are you going to do with these numbers that you have put together, with the balance sheet, with the income statement, with your cash flow statements? But income statements really allow a manager or owners or someone who is a part of this business to look at the performance of the business. You can analyze how everybody's doing. You're judging the instruments that you're using to achieve your financial goals. And a lot of times, this will include an analysis of the management. This will be either an internal analysis of yourself, judging how you have utilized your assets to create profits, hopefully, and also how you managed your expenses along the way. And I think I saw someone earlier share something about their Schedule F and how they like to try to not show too much of a profit. Just that's the reason why we used several different statements, and that's the reason why we are honest with ourselves, because it doesn't always tell the whole story of a company's financial health. On cash flow statements, what I like to say is, it's just like it's answering these questions. Where did it all go? Meaning, mostly, where did all the cash go? Where did it all come from? And will I need to borrow, and when? Like, usually when you're putting together a cash flow statement, if you're doing a cash flow statement in a projection format, you're going to notice where there are perhaps some gaps in financing. Sometimes cash flow statements, people only stick to a yearly cash flow statement. Especially for any type of farm business, I recommend that you break it down by quarters and definitely by seasonality. Especially if, within agriculture, we all know how the seasons affect us, and it's really, really important to break that down. So the more you can break down a cash flow statement in chunks of timelines, you can see where there's going to be up and downs in cash flows. And then also, first and foremost, and like I mentioned and talk about this all the time with my clients, you got to find out what you can pay yourself as an owner. So I've mentioned this before, but a lot of my experience, I when I'm working with someone and I look at something that they've prepared, they always forget to value their own labor and to pay themselves. And it's just so important to remember that. On the projections and pro formas, the biggest thing is to be honest with yourself. A lot of people I've worked with start off with this, like they go, well, I just have to make X amount of money. I have to make, and that's fine. That's kind of like what we call like a cost plus kind of scenario. But it's just really important to be honest with yourself. It's very important to be consistent as well with your numbers. Remember how you're developing your numbers. Take notes, take footnotes about how you're coming up with these numbers. And then what I always do with people, almost everybody that I work with, when we're getting into a farm viability scenario, I talk about the blue sky versus the dark sky scenario. A lot of people really, like I've mentioned before, a farmer is the craftsman entrepreneur, the highest level of a craftsman entrepreneur. They're obsessed with what they do. They believe in themselves. And sometimes that obsession turns into, well, everything's going to turn out great, and I'm going to be able to sell all of this at this amount of money. This event that we're putting on, everybody's going to come to this event on the farm. And sometimes it doesn't really work out that way. So being honest with yourself, go ahead, create that blue sky scenario. Everything's going to be awesome. But then there's also the dark sky scenario where, I hate to say this, but I do encourage you to say, oh, well, what if we don't reach our goals? Or what if we, half of the people come that we thought were going to come to this event, or I make half the sales? And just look at how bad it could look on paper. And then you'll find comfort in between those two scenarios. And you can find, okay, you know what, this is real. This is a realistic area that I really think that I'm probably going to end up in not so blue sky and not so dark sky, somewhere in between. And that just helps you with your process. It helps you with your preparation as you take an initiative to move forward with the business. And this is getting a little bit complicated. I know we're throwing a lot of information at you, but as you're getting into your managerial accounting, there will be scenarios where you're going to want to look at ratios. Lenders are going to definitely look at your ratios. So, so talking about solvency, as Curtis was going over, one of the major ratios that a lot of us look at is your debt to asset ratio, and it's very simply your total debts over your, divided by your total assets. I won't give. There are some standards out there that, but as we all know, standards are not too applicable when you're considering the entire United States and all the different types of farms that there are out there. So don't get discouraged if you see something that's written by, like a national, like the USDA or something like that, because they're considering all businesses at many times. So it's good to talk with a financial advisor, look at these ratios, and just, it just helps you look at the health of your business. For profitability, what we like to look at is your return on your assets. And that is your net farm income, which you can take from your income statement and divide that over your total assets. Like I mentioned, there are a bunch of different ways to look at this. There are, a lot of different ratios that people do use for profitability. And liquidity is your current ratio, which is like what Curtis was talking about in the beginning, that top level, your current assets over your current liabilities. Basically, everything that you have that's liquid, that is going to be liquid in 1 year, and everything that you owe within that 1 year, more or less. That's a general thing. So getting to know those ratios, you don't need to learn them immediately right now. We're not expecting anybody to learn anything immediately right now as far as management of financial statements, but also, getting it further in with your analyses. I do highly recommend doing a type of a vertical analysis, which is comparing an income or a cost category to your gross sales. This is really important, I think, for agritourism when you're dividing out all of the different enterprises that you have on your farm throughout the year. That being like, if you're having events at the farm, look at all of those events and see, what they're contributing to your gross sales, but also you can peg, some of those costs to your gross sales, or take your costs and look at them as a total of your total costs throughout the year or during a time period. It just helps you analyze how much money is coming in through different enterprises on the farm, through the farm stand. Certain things like that are just really important to look at, analyze, and just basically measure, not only in numbers, but also just how you feel. If you see something that's making a lot of money for you, but you really don't like doing it, and it takes a lot of time and effort, if you want to move away from that, you got to understand that you're probably going to lose a lot of income from it. So being prepared for moving and planning for the future with your different enterprises on the farm is really important. And then you can also combine your vertical analysis with horizontal analysis to identify period to period change. Horizontal analysis is just looking at that seasonality or month to month changes. And it's just when you get into that, when I find that people are on top of doing those types of analyses, vertical and horizontal, really, especially horizontal, they're able to prepare for the future. They're able to understand what's going to come up next for them. And it's real good practice to get into. And like I was saying, for some clues for improved management, find those major expenses. That's one of the first things that I do with a farm is I look at those expenses and I try to find out how we can, and if we can, cut those expenses. And then also on the other end, identify where all the income is coming from, and see if we can build upon that, the existing income that we're already making. And being honest with yourself and measuring how the business supports the livelihood of the people involved, meaning the owners, your team members, the people on the farm. It's really important to like look at those numbers, but also just see, is this business supporting our livelihoods, and making some decisions upon those results. And I always like to say, take a deep breath. A lot of this is overwhelming. Don't forget to breathe. um, and uh, and I also like to say that like sometimes cash projections, or even current, when you first put together your first balance sheet or something like that, and you see something that could be negative, or see something that is just not really not too positive for you, do not get discouraged. It's a starting point. When you're putting pen to paper, when you're doing these types of analyses, you're creating starting points to move forward and really address the health of your business. I don't think I can, it doesn't really come up good, but there are books out there. There's a book called Agricultural Accounting. I will share that. And then there's also just a real nice basic book that I still use to this day. It's had several iterations, but it's just called Financial Statements. And I will send it out. But it's a step-by-step guide to understanding and creating financial report. And it's for the non-financial professional. And it just really helps you from time to time as you're putting stuff together, or as a banker or a professional is putting stuff together for you. It just allows you to just to understand things a lot better. Maybe we can, talk a little bit more about that, like building on the question that we had before. I'm going to jump into the chat and maybe open it up for all of us on the board. But what scares you about financial statements? I know we put a few scary things out there for you, but yeah, feel free to share it.
Yeah, there's some interesting responses in chat, all that we should take time to read, but I'm going to jump to some of the questions, knowing that we've got 10 plus minutes to address some of the questions. One question that came up a few times is people looking for samples. In particular, somebody said samples of small farm financial statements. So I thought, between AgPlan and FinPac, let's talk a little bit about the samples and templates that are out there.
Well, I mean, within AgPlan, and I can't say enough great things about FinPac. FinPac is great when you're ready to get into something. I use FinPac with my clients a lot. That's always a starting point for me. I just jump right into FinPac and use that. When you're within AgPlan, we do have resources to look for those. There are examples in AgPlan, in the agritourism thing.
Curtis, did you want to jump in and add to that?
Yeah. So I just put in another link. Some of the other things that we do, we have a budget library that we maintain. And really, we're just curating from other states where we'll link directly to them. So it's not necessarily a sample of a small farm financial statement, but it is at least a place where you can start for budgeting. So this kind of answered another one of those questions that we saw where, how can we, where did it go? I think it was Gordon's question. If we don't have any historical data, it's a version of Gordon's question. If we don't have any historical data available to pull from, how can we put these together? Going to places like the Ag Risk and Farm Management Library, Farm Answers, where you can find some of those resources that have been put together by extension agents, by Lisa and Zach. Those are great places to go to as well. I mentioned Finbin for benchmarking. It's not just benchmarking. You can go there and you can look and see what other farms are, what their real expenses were. Right now, it's maybe a little corn, soybean centric, but if you are a dairy farm, there's lots of good information there. And we're working on putting in and trying to get some data for small, diversified marketing farms. that are in there. So there's lots of resources that are out there. It's just trying to, find where those places are. So yeah, the Ag-Risk Budget Library, farmanswers.org, which is the beginning farmer clearinghouse that we maintain. Those are a few of the places I would start to go look.
And would you, in terms of the folks using AgPlan already in there, starting with the templates the financial statement templates that are already in there?
Yep, absolutely. And then, also look at those samples that are in there. The samples are, they're good places to start and kind of get an idea of what you need to go in there.
Zach, before we move on from the templates and samples, because I think part of what can be challenging is for people who are already feeling overwhelmed, and now there's a lot of information out there, to have, one starting place can be helpful.
Yeah, I mean, I would definitely just like stick with what's within AgPlan. I mean, it's the bottom line is a lot of all of the line items in a financial statement are going to be the same no matter who puts them together. I mean, they are very, very similar. And like in my years of doing stuff like, from Vermont based stuff, you can go and talk with anybody in Minnesota and they'll know. I mean, if someone in my position, we're going to know each and every one of those line items is pretty much the same. So, people have put a lot of effort into this. I know the Center for Farm Financial Management has definitely put a lot of effort into it. So they have those items there. And I would also say, don't worry too much about looking at samples of whatever, or what everybody else is doing. Just pay attention to those line items and address those on your own. And that kind of will, I mean, it could seeg into what Alan was asking in the Q&A about personal assets rolled up into the sole proprietorship. People have their own ways of doing things. So many times I have situations where people include their personal assets within the farm business, and then other people exclude it. It's all up to you. There are financial implications for that. When I talk about that, I mean like taxes and such. So it all depends on your business formation, what you like and what you basically want to be responsible for. Doing that, differentiating or including personal assets and liabilities within your business is something that I highly suggest you analyze with a financial planner, a certified financial planner, or something like that, an exact specialist in tax planning or just financial planning, because they want to look at your entire scenario, and then you can take a look at that. It's very specific to the individual and the enterprise, I would say.
Great. Why don't we look at some other questions in Q&A? You touched on this already, Zach, but Gordon had asked about income statements for a lender versus tax reporting and tax paying. People write off as much as they possibly can to pay a minimum of taxes, but in the business plan, this may be a little distorted. What do you recommend for the business planning process?
Yeah, when you're putting that stuff together, I mean, like I said, the income statement doesn't show the whole health of the business, so it's just one thing to look at. But when you have all three of those statements together, and you can on your own highlight and explain to the lender that is what you did, that you made this action, you made a huge purchase in December or something like that. I have a lot of farmers that buy equipment in the last quarter of the year or something like that, and that is a tactic. I mean, a lot of farmers use that. People in general, I mean, businesses do that. But yeah, when you're going to a lender, I would just very, very directly, address this footnote. Say, hey, I was looking, the income statement was looking like this until I made this purchase, in November or something. So that's why it's also really important to do those breakdowns, do a quarterly breakdown, do a monthly breakdown. To be honest with you, I do a daily breakdown for my household's budget, and it's adopted from an income statement template that I've been using for nearly 18 years. So yeah, I'm talk about horizontal analysis. But yeah, so it's really important to show the whole life of that statement, and a lender would understand. Lenders are very familiar with that.
And if I can add on to that, one of the things that we talk a lot about is that the tax statement that, when you are maximizing your or minimizing how much you have to pay in taxes, your Schedule F, your taxes and your income statement, they're completely different. They should be, because they have different audiences. And when you look at like the cash portion compare, and that's why we do those two different parts, right? The cash versus the accrual, because the cash is a lot of times going to be minimizing how much you have to pay in taxes. And that's all that it's looking at. But that accrual income statement is looking at all of the other pictures. So really they should be separate, and you should be they work in tandem, but they're two separate things. So just keep that in mind as you're working through them.
I think we have time for maybe one or two more questions. One of them, back to labor. How do you allocate farm overhead and labor to the agritourism enterprise?
Well, from what we do with FinPac, and when we are, as we're looking at developing our market channel analysis tool, that is a complicated place. I mean, sometimes we do it via what the percentage of sales were per market channel, for example. Or, you're looking at how many hours, you look at your total labor hours that you are spending, and then you try to break them down of, well, okay, I know this much has to go into production and this much the front desk staff. And that, I mean, quite honestly, that might be the easiest way to be able to do that. But Zach, maybe you could chime in on that one.
Yeah, I referred to this recently, but like, go online and look at some, there are, I think, Penn State Extension, and there are several extension resources out there that do help you think through, even like use templates for figuring out, labor. But one of my kind of go-to favorite things is doing a cost plus analysis. You measure how much of a cost, like how many costs do you have, all the costs that you have involved with, let's say, an event that you're putting on the farm. You tally up all that information, and then you're going to basically find out what you have to cover as to put this on. And then on top of that, you want to see what you can pay yourselves and or your team. There's so many ways to look at that valuation. But what I would highlight, I was looking on my computer, but I can't find it right now. But there are some really good tools out there to figure out labor, especially for an event that you're putting on.
In the interest of time, we've got some more really good questions, and we're keeping track of questions, but we can't quite get to them all. In the interest of time, Zach, can we move to the closing slides? So your homework for this week before next Tuesday is to complete, or at least get started on, the financial section. Next Tuesday, we'll talk about the executive summary. If you get stuck, here's the contact info for the Center for Farm Financial Management. We'll send this out in the email that we'll send out soon. And in closing, we know we've asked you to fill out a survey a bunch of times, but there's a new question this time. So it's especially important, even if you've filled out the survey before, please take a moment to fill it out again. And we added a question about financial statements. That's it for now, because we're at the top of the hour, but we know that we're just scratching the surface here with the financial section, and we're around. And one of the questions that you'll be asked in the survey is, do you want one-on-one help? Zach is compiling a list of people who are requesting one-on-one consultations. In our small team that's running these webinars, we're not going to be able to address all the requests for one-on-one consultations, but we're going to be reaching out to colleagues in different states and different countries to try to match people once this 7-week series ends. So next week, we'll be talking about the executive summary. The following week will be a wrap-up week where it'll be open Q&A. We'll ask some farmers who've been working with AgPlan to share their experiences, good and bad. We welcome feedback that isn't always positive. We like to hear what's helping you, but we also want to hear what's not helping you and how we can make it better. So spend some time letting us know on the survey, and plan to join us for the next 2 Tuesdays where we'll be covering that in more detail. Thanks so much.